The runaway winner of the title of hottest market in Australian real estate right now is Darwin. 6 months ago in our quarterly Price Predictor Index, we reported that Darwin was showing signs of recovery. 3 months ago, we said the Northern Territory capital was rapidly rising. And now in this new winter edition of the Price Predictor Index, we can confirm that sales activity has gone ballistic in Darwin. This is the boom that only hotspotting saw coming. Darwin has come from nowhere 6 months ago to now rank as the strongest market in Australia. The numbers are extraordinary and unmatched by any other city or regional market in the nation. And because there's always a time lag before prices react, it's only now becoming evident in the price data from PropTrack and Cotality, which is why the Price Predictor Index, which monitors sales activity as a forward indicator of prices, is such a valuable tool for investors and property professionals. Another big reveal in the new autumn edition of the Price Predictor Index is that Hobart, after a couple of slow years, is moving strongly into recovery. Hobart is showing significant signs of revival in our previous survey 3 months ago, and this new survey confirms that trend with a noteworthy further rise in sales activity. In every edition of the PPI, we divide the 14 market jurisdictions, that's 8 capital cities and 6 state regional markets, into winners, losers, and the steady markets in between. Darwin and Hobart head our list of winners, and a number of state regional markets are also excelling with their strong sales activity. South Australia and Queensland feature strongly yet again, but the big improver is Victoria. Victoria is a no-go zone for some real estate consumers because of its high taxes and generally hostile state government. But markets are nevertheless on the rise, and regional Victoria is built on the resurgence evident in our previous survey 3 months ago. As usual, Adelaide is there as an almost permanent inclusion on our list of winners, and the Brisbane market continues to stand out also. There's only one major market classified as a loser in this autumn edition of the Price Predictor Index, and that is Sydney. In keeping with its weak price performance, sales activity has dropped 14% quarter on quarter. Sydney is one of the few markets in Australia where sales activity in the latest quarter is lower than it was a year ago. The number of Greater Sydney locations with positive rankings has now dropped noticeably in this latest quarter, down to 38%. And the 52% of locations with negative classifications, declining or plateau markets, is the weakest result amongst the 14 jurisdictions nationwide. A sales activity comparison with Melbourne illustrates the Sydney weakness. Melbourne has a lot more rising markets than Sydney and has 51% positive markets, while Sydney has only 38%, and there are far more declining locations in Sydney than in Melbourne. So Melbourne is one of the steady markets in our analysis for the winter edition of the Price Predictor Index. Individual precincts have strongly rising sales activity, but the Melbourne recovery is not yet universal. The dramatic surge in Melbourne sales revealed in our previous survey 3 months ago has not been repeated in this latest survey overall. So the overall situation, with 51% of markets receiving positive rankings and 35% negative, still remains bullish overall, but less so than the previous survey. There are, however, precincts with elevated or steady sales activity, mostly at the more affordable end of the Greater Melbourne market. Standout precincts with high demand are the local government areas of Frankston, Mornington Peninsula, the City of Melbourne and the Inner City, and Moonee Valley. Regional New South Wales overall is a steady market with outperformance in specific markets and appears to be on the cusp of becoming one of our winners. The outliers include Wollongong, neighbouring Shoalhaven, Wagga Wagga and Port Macquarie. Other markets with rising activity include Orange, Bathurst and Coffs Harbour. Sales activity in the Canberra market remains strong, although sales numbers have moderated a little in the latest quarter. After 3 consecutive quarters of big increases in volumes, the March 2025 quarter was down 8% on the December 2024 quarter, but still 60% higher than a year earlier. For the past couple of years, Perth has led the nation on price growth, but for each passing month, the price data shows that the boom is over. But a market downturn with falling prices is unlikely, as the WA economy remains amongst the nation's strongest, population growth is still high, and there is no major deterioration in sales activity. While there is no longer any upward momentum, a gradual switch of market focus from houses to units is helping to keep Perth sales steady. Regional Western Australia is outperforming its capital city, maintaining good sales numbers overall, boosted by strong performance in regional centres south of Perth, notably Mandurah, Busselton and Albany. There is so much more in the Price Predictor Index, with insights into markets across Australia and, most importantly, valuable clues about where the price growth is most likely to be found, something you can't get in any other research document in the nation.